Welcome to Business Model Development. I'm Dr. Matthew Thornton, Business Model Consultant for the Center for Evidence to Practice and Chief Executive Officer for the Center for Children and Families. This is Session 3, Vital Signs, the Financial Pulse. And in this session, our goal is to give you the resources you need to create a stable, sustainable, and profitable business. We're going to talk about 4 key financial elements in this session: budgeting, productivity, billing, and accounts receivable. We'll also briefly touch on expenses and cash flow. And as you'll see, every element we talk about is going to be interconnected. So let's start with budgeting, because every business needs to begin with a financial plan. And that's what a budget is, simply a plan for how you will generate revenue and how you'll spend that revenue. And we often start out with a rough budget. And this is something you might scratch out on a piece of paper. I've even heard of people doing it on napkins. But what I would advise you to do is to move quickly away from that rough budget and look at real data. If you've got a program that's already in operation, look at last year's actual expenses and revenue. Pull the financial statements you need to make an informed decision about the budget projections for the next year. Look at profit and loss statements, cash flow statements, balance sheets. And if you need to sit down with your financial officer or an accountant to make sense of those numbers, take the time to do it. Because being informed on the front end will allow you to make more accurate goals for you and your staff moving forward. And the next point I'd say is never assume the ideal. And this is a mistake that many people make. It's a mistake that I've made. They look at their budgets based on the best case scenario. So I've got X number of therapists providing X number of sessions a week, every week, but you neglect to account for the realities of providing service. Clients no-show, employees get sick or take vacation, referrals don't come in, so caseloads start to drop. So let me give you an example of how you might account for what happens in the real world. For instance, if I know the capacity of a particular team, and that's their full capacity, if everything's hitting on all cylinders, I know what they can do. But my goal typically for that team is going to be about 90% of that capacity. And this gives them a little room for the realities of life, but it also helps the team work together to hit that goal. So if someone's out, the other team members might pick up some clients or might hit some sessions and try to reach that goal anyway, even if one of their team members is out. Given that flexibility makes a more reasonable goal for them. But for budgeting purposes, I go even further than that. I typically plan for about 80% of capacity. And that would amount, if you do the math, probably about 6 weeks of total downtime and productivity. And if you think that that's too much, just start by looking at your leave, vacation, and sick time policies for your company, and it'll start eating away at your overall productivity pretty quickly, just that alone. That's not accounting for other factors that might come in. So when I budget, I typically look at about 80% of capacity. If it's a new program, I go even further than that because I know they're not going to be even anywhere close to that in the first 6 months as they build caseloads. So you got to account for the real world. Lastly, evaluate your performance continuously. And that means look at budget to actual statements at least monthly. This should be a continuous process of performance monitoring because that's going to allow you to make adjustments and alter your course before things get out of hand. If you wait too long to start looking at your performance and evaluate how you're doing based on your budget and what your actual expenses are, then a lot of times you'll get yourself into a real bind. So once you have a plan, the next step is to execute it, and that's where productivity comes in. And productivity for me is just the measured results of providing service. And it can actually be an indicator of a lot more than just what's going on or what's going to happen with your bottom line. It can also indicate whether or not your clients are receiving the service that they deserve. And I'll talk more about that a little bit later, but comparing productivity to caseload size and the actual units of service provided to an individual client, can be very eye-opening to supervisors. So be looking at that kind of data. But for me, the foundation of productivity comes from being able to set a clear and reasonable expectation for your staff. Clear so staff know what to expect, and reasonable so they can actually obtain it. If expectations are not reasonable, then you risk staff burnout, turnover, or even worse, staff may begin to lie or cheat to reach that unreasonable goal and submit false billing. And these kind of consequences are far-reaching if they do things like that. As you monitor productivity and you're holding staff accountable to those expectations that you set, make sure you do this in a way that's going to promote performance and quality. The work of providing behavioral health services in a Medicaid system is hard. It's hard work, and your staff needs to feel motivated and supported. For instance, the goal at my agency is to provide the highest quality service to the people that need it the most. So when we talk about productivity, what we're actually talking about is, are we providing the service to those families that need our help in the best possible way? So productivity becomes then a metric that lets us know if we're accomplishing that goal. It's not about the number, it's about serving the clients in a way that they deserve, giving our very best to them. And as we track productivity, we look at it along several lines. I'm going to be looking at individual productivity, team productivity, or program productivity, and maybe even divisions, depending on the size of your organization. And then slicing the data in these various ways can allow you to see where to troubleshoot, where your trouble spots might be, where things you might need to intervene on. For instance, a team's numbers may be down, but it could be just because a single therapist has been out with a serious illness for several weeks. So individual productivity for the rest of the team may be great, but the team is struggling because of this one factor. So by looking at all angles, you can kind of make targeted interventions. And this is preferable to doing something like sending out a shockwave through your entire company with the message everyone needs to get their numbers up, which really makes staff feel like you're just about the numbers and about profit and productivity, when really and truly you should also be about providing the great service to the clients. And so make targeted changes that'll impact the whole, while keeping the integrity of what you're trying to accomplish in terms of your team morale and your actual sort of corporate culture that you're trying to build as well. So if you track productivity over time, you can start to see trends emerge, allowing you to learn sort of the ebbs and the flows of your business. And this is going to be great information to feed back into your budgeting and your expectations. So learn your business. You may notice that you've got most of your clients may come from schools, and so in the summer months or around Christmas, your referrals may drop, and you can actually budget for that on the front end. Be planning for those times where things are lower, but you may also see that there are peak times for you where you really see a lot more productivity. So learn your business. This is going to help you in the long run. The next thing we want to look at is billing, and this to me is where you talk about productivity and wanting to monitor that, but that little line there at the bottom, productivity doesn't actually hit your books. It's what you bill that is going to hit your books. And so study and improve your efficiency in billing. Timeliness is going to impact cash flow. So you want to look at how quickly are you able to bill for services. So track those dates from when a service is delivered to when the documentation is done to when your staff is actually billing that, and try to decrease that time. You want to monitor and perform internal audits of the accuracy of your billing. Now this will do a couple of things. One, it'll make sure that your staff is appropriately billing for the services that they're providing. And this is going to help you on the back end if you're ever audited from an MCO with recoupments and that sort of thing. If you've done those internal audits, you can be certain that what people are billing is appropriate for the service that they're providing. The other side of that is there may be things that your staff is not billing for that could impact your bottom line in a positive way. They may not be using appropriate modifiers, or they may not be billing their time accurately. Things like that, you need to make sure that that your staff is accurate in how they're billing, because you could be missing out on revenue just on that alone. And lastly, you want to track what you bill and when you bill it. And this will become super important when we look at accounts receivable. but you're gonna need to make sure that you know what you've built and when you build it. Those kind of things, that information is going to be extremely vital for you when you're looking at how efficient everything is moving and flowing. If you're having struggles with cash flow, this is going to be an area that I would target immediately. How are you billing, and when are you billing it? How often are you able to bill? Moving on into accounts receivable, and this is something as I talk to people around the field, is an area of improvement for most agencies. And so what I tell you is a simple couple of statements. Know what you build, to who, how much, and when. And know who has paid you for for how much and for what. Um, these things are important. You've got to know who owes you money um, in order to argue and to track it and troubleshoot it. Because I'm going to tell you, the MCOs, they will pay you, but then sometimes glitches happen in their system. They may not realize that something's going on with a particular code. And if you don't catch it, they certainly won't. So know what you build, to who, how much, and when. And then from there, you want to track it. Once you've built it, you want to see who has paid you, how much they paid you, and for what service they've paid you. And I know that seems tedious to kind of follow your accounts receivable with that detail, but it will pay off in the end. Tracking your AR allows you to troubleshoot. And so there have been multiple times where we notice that a particular code is not being paid by an MCO, and we're able to contact that MCO and then troubleshoot that in such a way that maybe there's an error on our part in how that was submitted, or maybe there's an error on their part, which happens. Um, which if you're able to do that, then you can get that money into your account a little bit faster. You also want to monitor how MCOs pay. The timing matters, how often they pay, when they pay. There's an old statement in business that cash is king, and that is absolutely true. If you're not watching how MCOs are paying you, then you may get yourself in a bind with cash flow, not able to make payroll or not able to pay bills because you've got too much out in accounts receivable, where you've got assets on the books, but you have no cash in the bank to actually cover your expenses. So be monitoring your accounts receivable. Next, let's look at expenses, and we'll do this just briefly. What I would recommend is that you really take a close look at your expenses as close to real time as possible. And this may be maybe in the month, at the end of the month, looking at your expenses. You want to evaluate line items in order to make adjustments. You want to see how you're spending your money. There may be a line item that's inflated. Maybe you're spending way too much on a particular area. Maybe that's computer maintenance. Maybe you're spending a lot of money on other supplies. Maybe there's changes that you can make to kind of tweak that. When you're working with Medicaid, margins are typically pretty low. And so making adjustments with your expenses can make a real impact on your bottom line at the end of the year. What you will also want to do is watch for fluctuations and see if they happen at specific times of year. Because you may have an independent audit that happens, like for us in September, which is an extra expense, a one-time expense, but it's expensive and it impacts our bottom line. You may find that you have other things such as insurances and different things that come due at particular times of the year, and you need to account for that in your budgeting. You need to account for that in terms of how you're operating and structuring your business as well. So you want to be using your profit and loss statements to help guide your projections and your budgeting. So as close to real time as possible, these things are going to help you really guide your planning process as well. So all these things are interconnected, from your productivity in the field to how you bill it, how quickly you bill it, to monitoring your accounts receivable, to monitoring your expenses and feeding that information back into setting clear expectations into your productivity. These kind of make up the cash flow of a business. And for me, this is one of the areas where most people need a lot of sort of learning. And that's kind of what I would tell you to end with is be a student of your business. Uh, do what you can to learn as much about how the business operates. If you've got a clinical background like me, This is an area where you've got to continuously grow and learn. Be sitting down with your financial officers, with your accountants, be talking with other business leaders and see how principles that they apply in their businesses would impact your business as well and how they apply to us in behavioral health. But be a student of your business. Learn as much as you can about your business. And that's going to be the thing that's going to stabilize you long term is you having good information, being able to plan appropriately, being able to set clear expectations of your staff and hold them accountable in ways that's going to allow them to provide great service in the community, working well with MCOs to track what you've billed and hold them accountable to actually paying for that service, and then how that's going to impact how you spend money and invest that money back into your business. So that's what we're going to end with today. It was great to talk with you all. Thanks for joining. We'll see you next time.